Good afternoon, good evening, or good morning to all of you, depending on where you are. In a fairly sunny but not very warm London. My name is Michael O'Sullivan, and welcome to this third session of the Customer Success and Leadership Skills series. And today we'll be looking at what I've called bold decision making. Making big bets, if you want to call it that. And it could mean different things to different people. So if you just hold on a second while I drag that out of the way. Excellent. Okay, fine. Sorry about that. Yeah, different things to different people, depending on the size of the company, depending where your company is in its cycle. It could be a product cycle, it could be a sales cycle, it could be growth, could be startup. So it's a fairly fluid term, but I hope to be able to demonstrate that although it means different things to different people, there are some commonalities there. There are some basic rules, basic techniques that you can apply no matter what. And I hope we can demonstrate that. So before we go any further, a note from our sponsor, Practical CSM. They're offering, it's the last day, I think, today, actually, there's 30% off training courses, with that code on the screen. There's a wealth, although it says 5 days there, I think actually, I'd say it might be the last day today, but you might get lucky if you go back, we wait for a day or so. There's a lot of good courses there. There's a lot of good resource, a lot of good material in and around customer service and leadership, problem-solving skills, dealing with meetings, creating reports, lots of things. Highly recommend it. There's some really good stuff in there from some people that really know their stuff, know what they're talking about. So just a brief word about me. For those of you that have seen this before, sorry and all that, but for those of you who haven't, as I say, my name is Michael O'Sullivan. I've been around for, well, it says 30 years there, but that's a lie for a start. It's longer than that. And I run a variety of companies, different sizes, in and around the creative industries mostly, but not entirely. I've worked as a financial advisor and investment advisor to supranational corporations and banks. I've also worked for education, training and software companies. I've run Apple training centers, one that was ranked in the top 20. I've run European Social Fund funded projects. They are publicly funded projects by the European Union, for those of you that may be in the States or in Asia. Excuse me. So I wrote the bids, got the money, ran the projects for large 7-figure projects, which helped hundreds and in some cases thousands of professionals, freelancers, creatives, technicians to improve their skills, improve their employability, and in some cases to improve their companies with not only creative skills, things like Adobe and that sort of thing, but business skills, financial analysis, so on and so forth, forecasting, all the sort of things that you need to do. Pretty dull, but they need to be done. I've worked as a consultant to tech startups and next stage growth companies as part of a university hub. We helped over 100 companies there to gain funding, keep funding, increase funding, because the thing about it was they're very good at what they do. They're very good at what they know, whether that be technology, creativity, broadcast engineering, that sort of thing. What they weren't so good at was the business skills. How to talk to businessmen in a language they understand. For example, if you're putting a proposal together, be light on the technicals, be heavy on the financials, that sort of thing. That if you're in business and you're a VC or around VCs, this is what you know, is what you expect. If you don't know, how do you know? How do you know you don't know? If you see what I mean, known unknowns. It is difficult. I've also written a couple of undergraduate degrees around digital assets and managing in the creative industries. So you see, I've got a fairly broad background in and around business, finance, and creative industries mostly. We've got the chat room up and running. So if you have a question or you make a comment, say, you know, gosh, you're being really dull, will you do something differently? Drop it in there. I will try and respond to everyone that I can. If you can participate, it does help because it makes it a richer environment for everyone. I can feed off you. You can hopefully guide me where I'm going wrong. And at the end, there'll be an evaluation. If you could complete it, I would be grateful. It helps us to improve, help us to get better. Without your input, as I say, it is quite difficult. So what were we looking at? What are big bets and are they needed? As I said, the definition of a big bet is fairly fluid, but we'll cover a bit of ground. The nuts and bolts, what goes into it? So you decided to make the big bet, a big bet, whatever that happens to be. What are the nuts and bolts? What do you need to do? And how do you apply it to your company? How will it work for you? Is there anything special that you need that a company in a different sector would need? Are there commonalities? Are there basics that need to be in place? They're the foundations that need to be in place to make these things work. But we'll start with the question. What do you understand by the term big bet? As I've already said, different people means different things. When I was putting this together, I was thinking about that. And something that popped into my head is something I did for another project was Netflix. Now, you may or may not know a little bit about the history of Netflix, but their big bet, if you like, was moving from being a rental company to being a streaming company. So to them, that was a big bet. It was almost existential. If it goes wrong, are they dead in the water? Are they not going to grow? If it goes right, well, we all know it went right for Netflix. But for them, that was their big bet. It's a huge bet. And then I thought about something slightly different. So I thought about me, actually. Recently, one of the parts, I have another company that I run, that I own, which is about training development, online training, on-demand training, that sort of thing. And we put together a side part of it, if you like, which is around creating bespoke training for companies around problem solving, timekeeping, all sorts of things, health and safety, all sorts of things like that. And for me, the big bet was buying a couple of big new computers. An investment of, for me, it's a lot of money for me. It was sort of $35,000 to buy these computers and to create a render farm and the back end of it, so that I can do my own work and I can render up the material and save time and a bit of money by not putting it out to a commercial farm. On the other side of that, I thought, if I have a bit of spare capacity, I can rent out my render farm to other people that I know that are in a similar situation to me. So for me, that was my big bet. Not like Netflix, but to me, in a slightly different environment, that was a big bet. So as I say, what you understand by the term big bet differs where you are. But the commonalities are, they're normally strategic. It's not something that's quite a day-to-day issue. It's a strategic issue. It's a long-term issue. And it may require sacrificing other goals or priorities. You may say, well, I've got 3 or 4 things I want to do here. I'm going to concentrate on this one. I'm going to put all my resources into this one, or the majority of my resources into this one. And that means either putting stuff on the back burner, postponing them, or cancelling them. So it's about reordering, if you like, your priorities and focusing your employees' efforts and choices, so that instead of having 3 or 4 things on the go, which may or may not go well, but probably won't because you're spreading your resources about, concentrate on 1, maybe 1.5, maybe 2, but normally 1. So right, now this is what I'm going to do. This is what I'm going to concentrate on. This is what we've taken as a strategic bet, if you like, our big bet, our big, bold decision. This is what we're going to do. Are they needed? Well, it could be existential. For Netflix, it was existential. For me, it wasn't existential. It was a big chunk of my ready resources that I have sitting there for other eventualities. So if it's too existential, is it too big? If it isn't existential, is it big enough? These are it's where It's where you sit in your company, where your company sits in its market, where you are in those various cycles that we introduced to. Hi, Stephanie. Making yourself vulnerable? Well, yeah, see, yes, it is. If you think it's existential, then yes, it does make yourself vulnerable. But a big bet can be a change of direction. It can be a pivot. You could argue, and I don't think of this, but I have seen it argued that Netflix was pivoting. It was staying in the same market, but pivoting. So did that make them vulnerable? Possibly. There is a vulnerability there in the sense that you're committing resources, human capital, financial capital, maybe buildings, logistics. So yes, in a sense, you are making yourself vulnerable. It's right. You're right. Are they the best way to make the jump to next stage growth? Depends where you are on your cycle, obviously. You can grow organically. Is it the next stage growth? Is it the only way to get there? Well, depends on your point of view. You could argue, and for those of you that have come across me before, they think, oh my God, he's banging on about Apple again. You could think that the iPhone was an existential risk. You could think it was organic growth because they're just building and building out the technology and new types of technology. Depends on your point of view. And that to an extent is where you're vulnerable or not. And is it the right time? Well, who knows? That is only something you can do by analyzing your situation. And are you financially secure enough to do it? Are you secure secure with your idea? Do you feel that this is something that is more than 50% likely to work, or 60%? It depends on your profile. I mean, if you might have an investment portfolio, like you say, I'm a low risk taker, I'm a high risk taker, I'm middle of the road. It really depends partly on your makeup. And maybe you could even say that it doesn't make a lot of vulnerable. It's not really a big bet. Well, yeah, that's thanks, Ricky. Mm-hmm. That perhaps depends on your view, your situation, and the type of bet it is. Is it an internal pivot to make you more profitable? Is it a big pivot to jump into a new but unrelated market? There are lots of imponderables going on there. And why is it important? Well, as we've already said, teams can't focus on everything. You can do lots of things fairly well or not very well, or you can do a few things really well. And it's about focusing on the must-haves. If you focus down, you're less likely to be distracted. You're going to have a better view of what you're doing, and it helps you, as I say, to identify trade-offs and create roadmaps. This is where we're focused. This is where we're going. There are some companies that I'm sure you all know about that are very good with their roadmaps, what they're going to do. They don't tell people, but they have this clear internal vision and planning of where they're going to go, and they have these steps along the route. That means that they focus in on certain things, certain areas, certain products, certain techniques. Decide that these are what they must have. And we go back to what we said before about sacrificing and putting to one side, if you like, as a trade-off. So think about your own company. And next stage growth is normally identified with a startup going to next stage growth. It doesn't have to be. It doesn't have to be. So in your own circumstance, in your own situation, yes, you're right. We can't boil the ocean. Good point. Never heard that before. But what does it look like in your company? What does it need? What will be the decision? What will be the products or the technique or the change, the pivot that's going to take you to the next stage? It could be a new piece of software. It could be improving your customer relations. It could be, if you're into customer service, introducing a new database. It could be revolutionizing the way you approach customers. It could be introducing new techniques. Active listening is one that I come across and hear quite a lot. So it's just as an example, focusing in on the customer, putting to one side the marketing of it, or the, if you like, sometimes the feedback, focusing on the customer. What does the customer want? What does the customer need? What do we have to achieve for him to be successful? So this might mean a reorientating or a reprioritizing of existing procedures and architecture. So, as I say, what it means to your company, so what the techniques are directly applicable to what your company is, where it is, and what you want to achieve. Are there common themes? Well, yes, there are common themes. One of the most common themes is preparation and analysing what you need to have in place to achieve that. For example, do you need specific structures in place? Do you need new communication strategies? Do you need new production lines? Do you need to change your location? If you're going, for example, if you've decided that you're expanding into a neighbouring region or a neighbouring country or another continent even, can you do it from where you are? Do you have the type of company that can stay in Chicago or Christchurch or Paris? Or do you need to move from London to Paris, from Paris to London? What structures do you need to have in place? Do you need better communications? Do you need to have a 24-hour customer service support? So you need to think about what specific structures you need for your specific situation. How are you going to implement it? Do you need more staff? Do you need different staff? Do you need differently trained staff, for example? Do you need more resources? Do you need stakeholder support? Do you need shareholder support? Investors? Do you need more capital? I said earlier, do you need the staff to be trained, for example? So you need to sit down and think what you need to do. And those are common themes across most situations where you're looking at a strategic bet, a big bet, or something that's going to change direction, game changer, if you like, game changer. And how do you prepare your staff? How do you communicate it to them? Nature abhors a vacuum. So do people. So if you're contemplating something that's game changing, you have to take all your stakeholders with you, your external ones, your internal ones. So how do you prepare them? How do you communicate it to them? So let's just look at a couple of examples of how we can do this. So we're going to start off with software as a service as a tech startup. And we're going to break it down into three areas. We're going to look at the strategy, we're going to look at the bet, and we're going to look at the payoff. Oops, let me go wrong. Beg your pardon. Oh dear, let's go back. Right, sorry. Okay. So here we are. What's the strategy? Well, we're looking at revenue. We're looking at revenue, start off with revenue growth, improve revenue growth, and logo growth. And these two broadly these two areas, revenue growth and logo growth. I think revenue growth, you're looking really, it's good for startups because it's easy to understand the value there. And it's easy to identify, to quantify revenue growth. Yes, revenue's gone up, revenue's gone down. It's not gone up enough, it's gone up brilliant, so on and so forth. It's fairly easy to quantify and understand. And you can more or less directly link it to customer size. If you've got large customers, generally the revenue is larger. So if you acquire a large customer, generally revenue is going to go up. That's a fairly direct equivalence there. You can see the join there, if you like. Logo growth slightly different. Logo growth is more around where size, where scale matters. So it could be like a platform company that, good old Netflix, for example. They're a platform. They want their name out there. They want their brand out there. They want brand recognition. They want people to think of them first, so they can acquire more customers. And WordPress is another one, for example, as a platform company. People use WordPress as a platform. So, oh, I need a website. I know, I'll go to WordPress. So that's where logo growth, because they've seen it and seen it and seen it, and it's embedded and it works. It is quite expensive in the short term because you're spending a lot of money to get your brand out there, your logo out there, your identity out there. and the revenue is not necessarily going to come straight back in. So you've got in the short term, it's quite expensive. In the longer term, obviously, it makes it more valuable, and to an extent, customer size doesn't matter. You just want more customers. That's the thing about logo growth. But both of them, you're looking at the market size, the addressable market, and it enhances your attractiveness to large enterprises, large companies. Now, this could be as a partner. This could be as an investment opportunity for them. You could want to sell the company if the right offer comes along. So that was the strategy here. We want to increase our revenue. We want to increase our logo growth, and we decided to do it by regional sales support, improving our customer service, and we're going to target specific competitors. These are the people we're going to go after. We're going to look what they do, analyze what they do. How can we do it better? How can we add value to our offer by looking at what they do, emulating what they do, improving what they do, so that we get to implement our strategy or achieve our strategy. And the payoff is, well, if it goes well, you gain new customers, new regional customers. You can attract multi-regional customers. You become a different proposition. You're looked at differently by other companies, other enterprises, and when you go to partner with them, or to discuss partnering with them, they look at you in a different way. So the strategy and the bet and the payoff. So that's for new growth. That's for where you want to just increase the revenue flowing through the company. So this one is, we're looking at churn reduction here. Again, we're going to look at the strategy, we're going to look at the bet, and we're going to look at the payoff. And this could be something like, I say, a new customer success management database, for example. That's a way we can implement it. And you can see how there are cross-cutting themes here. So you want to reduce the churn to increase retention, and by reducing churn and increasing retention, let's get those right way around, you expand your customer base. So by cutting down on the churn, you can reduce the new acquisition costs, because acquiring customers is more expensive than keeping them. So by definition, even if you don't increase your revenue, if you cut your acquisition costs, your margin is going to go up. And with existing customers, they over a period tend to trust you more. So if there's a bigger order, they want to increase their market order, their market share, they may come to you. So your average order size will tend to increase, and this leads to other opportunities, upselling and cross-selling. This is what you want to achieve. So we need to get the churn down. And how are we going to do that? Well, one of the ways is customer success management. It is by being more proactive, by improving your onboarding and your adoption strategies and your support, by active listening. What does the customer actually want? Don't give him what you think he wants or what you think he might want. By active listening, which is normally around one of these 80-20 rules, that you spend 80% of your time listening and 20% of your time talking, you actually listen and take note of what the customer wants. And the customer feels better about this because he gets a sense that he's valuable, they're valuable to you, he or she is valuable to you. And they come to see you slightly differently. So in addition to you're cutting your costs because you're not giving them something they don't want and spending time, effort and money on things that the customer is unlikely or doesn't want because he hasn't asked you for it, you can actually improve your processes, your onboarding, your adoption processes through cutting costs and being more accurate in your targeting of the customer. So improving your support. Because they feel good about the way they're being treated, the customer is less likely to go. They're less likely to look somewhere else. And if they're not looking somewhere else, they're less likely to go. It's only when they start looking around, they get their heads turned, that churn starts to go up. So if you have a good customer success management process, architecture, structure, you can reduce the churn. And incidentally, going back to what I was saying earlier, there's a lot of good stuff around this and in the Practical CSM Academy. So it's well worth having a look. And it could be, as I said about earlier, about the database. It may say that this is my big bet here, we're going to improve by creating a new database, a specific customer success management database. We're not going to piggyback on the sales or the marketing people's databases or the ongoing customer support. We're going to build our own, and we're going to invest in it, and we're going to invest in training, and we're going to pivot to do this differently. We're going to do it better. We're going to appear to invest more time in the customer, although actually from the back end, we're spending less time on it because we've got our processes better. So we go back to what we were saying earlier about what do I need to have in place? I need to have trained people in place. I need to have the people, my staff, my colleagues on board, seeing the advantages of it. So we go back to the planning. So, well, I'm going to put a database in. What do I need to do? We need to convince the staff that it's a good idea, for example. We need to convince the staff that they'll be getting more results for less input, for example. And you'll see your business reviews, the targeted business reviews will get better, and because churn has gone down. And hopefully the payoff is going to be that. Net revenue return is retention has gone up. Customer lifetime value has gone up because the customer stays with you for longer. Retention has gone up. The net revenue retention has gone up because your acquisition costs have gone down, even if your revenue hasn't gone up. Because your acquisition costs have gone down, your margins are improved. And you'll see that the return on your own investment, where you've invested, for example, in this database or this new process, or the way you deal with customers, means that you're generally winning across the piece through this particular, if you like, big bet. And in product pivot, it's similar. It's similar. We're going to pivot to a new product. That's because the old product is no longer as attractive. It doesn't do the job. The market has changed, so it doesn't address the market need. The customer has changed. We may have an opportunity for investment, for either external investment, internal investment. It could be a partnership, investment in the sense of a partnership with another software producer, for example. So to say, this is what we're going to do. We've made the decision to pivot. We're going to do cool. Let's go back to our customer service database. We're going to do it differently, and we're going to invest in an entirely new way of doing things, or a more modern way of doing things. If we're going to do this, if you like, you could say we're going to do the same thing, only we're going to do it in a better way. How are we going to do it? We could either design, build, launch a new product, or we could repurpose what we've got. And this obviously is a quicker way of doing it. And you can continue to sell the old product. So if you like, you're not coming out of the market until the new one is launched, and you can launch you could then style it as an upgrade or a revamp rather than a cold launch, if you like. So the bet is design, build, launch, new product. New really should be in inverted commas there, because it depends how you present it, how you style it. But essentially, what you're going to do is going to a new way of doing things, a new direction, if you like. Again, the payoff. You might lose money in the short term, and it may be because you're either losing revenue, or you were doing that anyway, because we've already said that your old product is no longer as attractive. It doesn't meet the market need. It doesn't meet customer demand. There are better, quicker ways of doing it. It doesn't perhaps utilize new technologies. It may not be usable in the cloud, for example. It may not have a very good user interface for a customer to use directly. There are lots of things. There are lots of ways that it could be a problem. So your short-term decrease in net new revenues could have happened anyway. So if you hadn't done anything, you would be in the same situation. In fact, you'll be worse off because it's just going to keep deteriorating. But in the longer term, we can say, yes, we're going to double in size. Hopefully we will. But in the longer term, as the new product comes on stream and is better in many ways, it could be, you could generate more income. It could cost you less to run it. That could be less in terms of people. It could be less in terms of physical resources. It may not need as much physical footprint, real estate to run. It may be a more sustainable product in lots of ways. It could use less power. It could be more environmentally friendly, which again, these are the sort of things they come across as buzzwords, but customers like companies that are sustainable and environmentally friendly and are for this corporate social responsibility. So it could be that the new product could be presented not only more efficiently internally and in terms of revenue generation, it could also be presented as a pivot to a more sustainable way of doing business. The company is environmentally aware and it's sustainable. So there are lots of ways of looking at this and how you present and how you package the financial requirements. Yeah, as we said earlier about Netflix and Blockbuster, and yes, Blockbuster told them not interested. They had the opportunity to purchase them. Netflix went to them actually to sell the company to Blockbuster, and Blockbuster said, "You're kidding! You've only got revenues of, I think it was 80 million. I should be 10 bob behind them." And Netflix, Blockbuster said, "Yeah, get out of here. You're not worth it. You're no interest to us. We turn over 10 times that." I think it was 3 years later, don't quote me, but I think 3 years later, Netflix had pivoted, Blockbuster filed for bankruptcy. So, new products, new way of doing the same thing, depends on your point of view. Now, is it a proactive or a reactive strategy? Depends on your point of view. And do you need to pivot to increase margins or turnover, or do you need to adopt a new strategy to increase margins or turnover? Or is your existing market, is it in decline? Is it in terminal decline? Are you reacting to something that's going on now, i.e. the market's in decline? Or are you being proactive and seeing that your market is at least not growing and that you feel the urge or the need to do something about this? So really, proactive and reactive, they are two sides of the same coin. You could actually make the case that they are the same thing. And you just do one sooner than the other. But essentially, they're the same action. Depends on your company, on your market, on your particular position. But what are the nuts and bolts of it? You've got to think, I think, about investors, about shareholders, and about stakeholders. But the starting point is you need a bold point of view. It has to be something that is going to make a difference, a proper difference. You're not tinkering around the edges here. I think this is something that's quite fundamental to the company. Not necessarily existential, because that, as we're going back to what you said earlier, is going to make you vulnerable. But again, you might be being reactive and you're feeling, if I don't do something bold, if I don't make myself vulnerable by making this major bet, if you like, this major decision, then you're going to collapse anyway. You're going to go broke anyway. It's not going to work. So you're vulnerable, whether you like it or not, looked at in that way. And it's a big bet that you're willing to prioritize with time and money, all sorts of resources. And I think actually the most valuable resource I've always thought is human capital. I mean, financial capital, yes, investors, so on and so forth. But I think the real value in any company is the human capital. So although that says there time and money, I think it's people, time and money, and bringing the people with you, I think is important. And again, as we've already said, you have to have a deep awareness and understanding, and it's about communicating with these people. And there's different methods of communication for different audiences. You need a deep awareness of how different stakeholders will interpret your point of view. Will they see it as reckless? Will they see it as visionary? Depends on their risk profile. It could depend on how much money they've got invested with you. And of course, different stakeholders have different stakes, if you see what I mean. If they're staff, then they've got their livelihoods, their mortgages, if you like, are at stake, and their day-to-day living expenses. So you have to speak to them in a different way than you do to a VC, for example. But you need to understand how they're going to view and interpret your point of view and tailor your message, your communication strategy accordingly. So it's something you really need to be very much aware of. And you need to be able to justify it. You can't stand there and say, oh, I think it's a jolly good idea. I've just got this feeling it's going to work. You need to be able to stand behind your decision and build followers and relationships. As I said right at the beginning, when you're doing a pitch to a VC or to a funder, be light on the technicals, be heavy on the financials, because you need to be able to justify and stand behind and say, I think this will work, and these are the reasons I think they are, because my rate of return is what I envisage to be this. I think the market is this. I believe we can be here, here, and here in year 1, 2, 3, 4, 5, whatever. And if these are realistic and well thought through and well argued, it communicates confidence, and confidence and uncertainty are they're contagious. They're contagious. People, there's something called homeostasis. You may or may not have come across it. It's in everyone. It's to varying degrees. It's in everyone, and it's a fear of change. It's an unwillingness to change. It's the status quo. It's basically, I want things to stay as they are. I'm comfortable with things as they are. Everyone has it to a degree. When you're looking at these sort of investment decisions or these sort of strategy decisions or pivots, you need to think about things like homeostasis and other things that are inherent in people. They can't help it. They're there. They're just various biases, like anchor bias and so on and so forth. They don't want to change. So you need to be aware of that when you're dealing with stakeholders. You need to be aware of that when you're justifying your decision and your willingness to stand behind it and justify it. And you need to, once you've got your stakeholders behind you, once you've justified your decision and you're bringing people along with you, whether they be internal staff, whether they're VCs, whether they're existing investors, you need to get on with it. You need to be seen to act, because if you're confident and you're projecting confidence and you're seen to be moving, even if it's just small decisions, and you can't sit there and say, I've got to wait for all the information to come in, because there's always another bit of information. There's always one other piece of the jigsaw. You might have 98 pieces of your 100-piece jigsaw. You can't wait for the other two. You've got the picture. You need to say, right, I've got the stakeholders on board. I've justified my decision. People are coming with me. I have to appear to be confident, and I'm going to act. I'm going to make decisions based on the majority of the information, and I can't wait for it all, because I'll never get it all. So it's another thing is act, be seen to act, even if it's small steps. Make the steps and take the steps. And be willing to experiment. You need to think, I'm going to have the confidence to go with this and to try this. I'm sure a lot of you heard the old saying about Edison, that he didn't fail. He just found 999 ways not to make a light bulb. But he was willing to experiment. He was willing to try. And part of the willingness to experiment until you get the momentum. And I'm not this thing about fake it till you make it. I'm not saying that's a good idea. I know it's very prevalent in Silicon Valley, the Silicon roundabout in London, in the UK. I'm not saying you fake it till you make it. I'm saying that experimenting and trials are a good thing. And part of what makes that a good thing is having the environment around the people, the ones that you persuaded to follow you with your followers and relationships building, is no fear of failure. Creating an environment that, from your bold point of view, you're confident, you've created this environment where people aren't afraid to fail. They know that, they understand that they're not going to be criticized for failing if they've made a reasonable decision with a reasonable bet, because what you're equipping them is the same, if you like, the same environment that you've expected from them for your big bet. If you see what I mean? They're making, in their sense, a big bet by experimenting and trying to get momentum. And fear of failure, or not, fear of failure isn't a good thing. Fear of failure is something to be avoided, and with the right environment and the right mix, if you like, of these ingredients, these sort of 6 ingredients, it's like a pizza. You put all these ingredients together, and you need more of one, less of another, depending on what type of pizza you want. But look at it as a mixture. And if you put those things together, depending on your situation, you might need a bit more blue and a bit less green, or a bit more red, or a bit more orange, that you can get the mix, right. So then think about your own situation. Does it work for you? So what would work for you? Are these the 6 ingredients, elements that you think are right? Are these the right choices? I mean, what would you change? Would you do things differently? Would you have a bit more blue and a bit less red, so on and so forth? How does it apply to your company, to your situation, to where you are in the cycle? And then going from that, what do you think a big bet looks like in your company? Oops, I've done it again, haven't I? Sorry about that. Here we go. Right. So we've already talked about the various ingredients that you need to put together in this. People, training them. Do you need new blood? Do you need people with different skills? Can you train the people you have? Do you need to bring them in permanently? Do you need to bring them in as consultants, as advisors? Do you need to bring them in to do a town hall or one-to-one sessions? What resources do you need? Do you need new software? Do you need new buildings? Do you need, what could it be? A new location overseas? What do you need? Research and planning. How are you going to do this? So really you need to think, I don't know here, or I have a known unknown, and I need to do something about that. So research and planning. And sometimes when you start doing your research, you come across your unknown unknowns, which is even more valuable, I think. And planning and putting this vision together, this route map together of how it's going to be done. And then what are the costs involved? Are they capital costs? Are they revenue costs? How can you amortize them? How quickly can you get a rate of return on them? And is it a low risk? Is this a low risk part of the business? Of the process? Is this a medium risk? Is this a high risk? It's about analysis and the planning and the research. And I say, have you got the people to do that? Have you given the people the time and the knowledge to do that? So in terms of resources, have you given them the time resource to do it? Creativity and innovation. Are you at risk of making the same mistakes? Because although you've gone in a new direction with a new product in a new way, is there a better way of doing it? Have you sat down and thought, I think, is this the best way? How many people out there sit down and think, okay, I've decided what I'm going to do. I've done the research. I've allocated resources. I've got the people in place. Do you then sit down and think, before I go actually any further, am I doing it in the best way? Is there a better way? Is there a more creative way of doing this? We're going to set out a new phone. We're going to make it whizzy and all singing, all dancing. And do you actually sit down and think, is there a better way? Is there a better interface, for example, to do this? Can we make it easier for the customer? Can we come up with something groundbreaking? Like my good old friend, the iPhone. Perhaps they always intended to do it like that. Perhaps they got as far as thinking, we're going to design this brand new phone and we're going to make it really nice because it's Apple and trendy and so on and so forth. And Steve Jobs or Johnny Ive turned around and said, hang on a minute, have we actually thought there's a better way of doing this? Oh, I know. We'll make it a big touchscreen. Oh, that's a good idea. Perhaps they did that from the beginning. Perhaps they sat down after they'd done their analysis and research and planning and resources and what have you, and said, hold on a second, let's just be a bit creative and innovative here. Let's think about this. So you've gone all through those processes and you come up with, have we got the project management skills? Do we need to bring in a project manager? Have we got the skills and the resource in-house to do this? Again, you're feeding back a little bit into your creativity and innovation. If you bring in outside talent, outside knowledge, yes, it could be more expensive. It could be a game changer in the sense that they bring a fresh pair of eyes. I've just been working on a project with a client, and we just hit this brick wall. We couldn't get something to do what we wanted it to do, and we went back and forth and back and forth and back and forth. And we've done all the people, resources, research and planning. We've done I can't get it to work. I can't get this. This won't do it. And we farmed it out. We gave it to another developer to have a look at this thing. And God bless him, he came back and said, have you thought about doing it this way? And, oh, no, I hadn't. And it was brilliant. It was simple and it was brilliant and it worked. And we were going back and forth, back and forth. We brought him in as a cost. And by being creative and innovative, it changed the situation. So as I said, project management can be the same thing. Is there a better way of doing this? Is someone who's been in this situation before better equipped to not only see what's down the road a bit, saying, I know where you could hit a problem here because I've been here and I've done this sort of thing. So we need to do something slightly different. And yes, to answer the question, I think, yes, it is applicable to partner with another organisation to do a big bet as a joint venture. Partly because we're just saying they bring other eyes and skills and knowledge to the table. They may have things that you don't. You must have things that they don't. Otherwise, they wouldn't be thinking about a joint venture. And what was said before, sorry, I've just seen this. Being realistic. Yes, you do need to be realistic. As resources, you're right. The resources are the second one on the list there. It needs to be realistic. It's a balance. Being realistic and being bold. There's an old saying: "Be brave, but not too valiant." So yeah, be brave, but don't get carried away with it. Yes, you have to be realistic, and that's part of your analysis and your research and your planning. Have we got the capability? Have we got a contingency if something goes wrong? This is all tied up in these examples here. And workload. Have we got the capacity to do it well? In some cases, as we said earlier, that you need to put other things to one side. You need to prioritize, because if you feel that this is something that's worthwhile doing, it could take you to the next stage. It could save you from a long-term decline. Then perhaps you do need to consider stopping other things because of the workload issue, or because of the costs, the management time, so on and so forth. And at the bottom, the one at the bottom is the sort of the foundation of all the others. Have you got the in-house knowledge, the skills, the experience to undertake this sort of venture, this sort of project? So if you like, although they're all separate, these things are all interlinked. And I think no matter what company you're in, what sort of environment you're in, what stage you are in the company, these all interlink and they're all cross cross-cutting themes that link together. So we finished a bit early, which is unusual for me. If you've got any questions, please put them on the chat line. I'll be very happy to answer them if I can. I appreciate you spending some time with me, investing your time with me. Hope you feel it's an investment anyway. And if you'd like to complete the online evaluation today, if possible, that would be really good. So thank you for your time. As I say, if you've got any questions, I'll be happy to answer them, to deal with them on the chat line. But anyway, thank you very much for your time.